Today, we have some significant updates to share about SoFi, news that could impact both your short-term and long-term investments in the company. Let's dive right into these exciting developments. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. First up, SoFi has made impressive strides in the latest quarter by increasing consumer deposits by a record $3 billion. Additionally, they have maintained strong demand for their loans, selling over $0.9 billion worth in the first quarter alone. Let's break down what these numbers mean for SoFi. Starting with consumer deposits, the $3 billion increase is a noteworthy achievement, especially considering SoFi is a relatively new player in the banking industry. Competing against established giants like Bank of America, JP Morgan, and Wells Fargo, SoFi's ability to attract such a substantial amount of deposits demonstrates a significant competitive edge. This success suggests that consumers are finding value in SoFi's offerings, even amidst a landscape dominated by more traditional banks. Recall the financial scare about a year and a half ago, when consumers were fleeing smaller banks, fearing insolvency and seeking refuge with larger, more established institutions like JP Morgan and Bank of America. Despite this challenging period, SoFi not only retained its deposits, but has continued to grow them. This resilience speaks volumes about consumer confidence in SoFi's stability and attractiveness as a banking option. One of the strategies that have paid off for SoFi is their enticing $300 bonus for new customers who switch their direct deposits to SoFi. This offer has been a significant motivator for people to make the switch, despite the inconvenience of transferring their financial arrangements like direct deposits and automatic payments. By offering this bonus, SoFi effectively reduces the hassle for customers, making the transition smoother and more appealing. Moreover, SoFi's lack of physical branches isn't necessarily a drawback. In today's digital age, a strong online presence can be just as, if not more, valuable than a brick-and-mortar presence. The user-friendly website and app that SoFi offers are significant advantages, especially compared to the outdated and often frustrating online experiences provided by many traditional banks. In the longer term, however, we should anticipate that larger banks might respond to SoFi's growing presence and competitive edge. Much like how retailers such as Target and Walmart adapted to the rise of Amazon by leveraging their physical locations to enhance their online services. Traditional banks might find ways to integrate their brick-and-mortar assets with improved digital offerings to counteract the growing appeal of online-only banks like SoFi. Now, let's discuss the other major news: SoFi's sale of over $0.9 billion in loans during the first quarter. This figure is crucial for understanding SoFi's banking business, which makes up more than 60% of its operations. Attracting deposits is only one side of the equation. Making and selling loans is equally important. When SoFi issues a loan, they have a choice. They can either keep the loan on their balance sheet, managing it and collecting payments directly, or they can sell the loan to a third party. By selling these loans, SoFi can immediately recognize revenue from the sale and potentially avoid the risk associated with holding the loan long term. This strategy allows SoFi to generate income from fees and premiums, rather than relying solely on interest payments over the life of the loan. Selling loans at a high volume, as seen with the $0.9 billion figure, indicates strong market confidence in SoFi's loan products. Investors are willing to purchase these loans, reflecting their belief in the quality and reliability of SoFi's lending practices. This confidence is further evidenced by SoFi generating a net income of $100 million, with a net profit margin of 21% in this segment. It's important to highlight that SoFi Bank, the most profitable part of SoFi's business, is currently generating all the profits for the company. The other segments, including financial services and technology, are still operating at a loss. However, the profitability of the banking segment is crucial because it funds the growth and development of these other areas. With the bank generating substantial profits, SoFi can reinvest in its technology and financial services, driving future growth and expansion. In summary, SoFi's recent performance in increasing consumer deposits and selling loans is excellent news for investors. The company's ability to compete with larger, established banks, coupled with innovative incentives and a strong digital presence, positions it well for continued growth. The profitability of the banking segment not only underpins the current financial health of the company, but also supports its broader growth ambitions. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.